This is important for all of us, yourselves as the broker, to understand the profile of your client, as well as for us to know what the insured name will be, who's the contact person, where they are located, their website if they have one, their VET number, and their company registration number. So these are all identifiers of a company, and we generally want to know for FICA purposes who we are insuring, when they business commenced, and the full names of the companies that we will be insuring. So this is very important where the client has other businesses that they would want to insure in the policy, for them to actually declare these under part 1 of the proposal form, because then this gives us an understanding of how many branches we're covering, how many entities are noted as insured under the policy. So this is very, very important, and we'll always include this on our proposal forms, as this gives us an idea as to who we are insuring. And then the second part of the proposal form will contain the fee income, which is very important for us, as we do rate PI on professional fees earned. And we are seeing that once third parties have paid a fee to the professional and the work has been done, that's where the claims will then come from. So we look at past fees, we work on past fees, because that's where the fees have been paid and most likely the work has been done. We look at domestic fees, so local fees for South African-based companies. We look at any subconsulted fees, so the fees that they would pay to the subconsulted if they are subcontracting certain duties. We also look at any international fees, and those would then be earned outside of South Africa, sometimes within the borders of South Africa and in the African countries, or internationally in countries like your UK and other territories. So we do look at exactly how the split is, because if the company is focused only on work outside of South Africa, that means that we would be spending our efforts defending that client outside of South Africa. So this is very important that it's accurately split so that we understand where the risk lies. We also look at current fees. That is when the financial year end would be immediate. So for example, 28th of February as a financial year end, that would be current fees. So that's what we would be looking at those fees there. And then any future or estimates, this will then include any projects they might be undertaking in future. We don't generally work on future or estimates because there's no work that has been done yet. Generally in the built environment, it means some of the tenders that they've been bidding for. So we generally don't look at the future or estimate unless it's a new company that is just starting out and they're estimating some of the projects that they would work on. So that is the fee income split. And it plays a huge role in us understanding the size of the risk and the exposure that we are facing. And then we also go into part 3, which is the business risk. And that would be the number of staff, the number of principals that are in the firm that are qualified, the non-professionals. We also look at their qualifications, the year that they qualified. So it's important that that block that is on that page is completed, because then it gives us an idea as to if the professional is adequately qualified in their field of expertise. We also look at some of the professional bodies that they belong to, and we also look at any other companies that they may be affiliated with or associated with that they may want to be covered under this policy. We look at the jurisdiction, as I said, in terms of fees. Where are they earning their fees? Are they earning their fees outside of South Africa or inside of South Africa? And again, that also plays part into our territorial limits. Again, as you know, we are offering cover worldwide, excluding USA or Canada. So we also need to know if they do have any work in these territories, and that question needs to be answered as well. Are there any questions so far before I move on?
Nothing in the chat yet, Fiso.
Perfect, thank you. Okay, and then we also have part 4 of our proposal form, which is the risk management. We look at the contracts that they have in place. We do recommend that there is a contract every time the insured is engaging with third parties. As we mentioned the last iTOOsday that I presented, the importance of contracts and limitation of liability. So this question is mainly dedicated for that, for us to see that they are using contracts in place so that if there is a claim, it's easy for us to, set a basis for that claim and to defend our insured. Whether they have a dedicated risk manager, it's very difficult for your new startup companies to have a risk manager. But if they do, it's important for us to know that someone is keeping a risk register in the company and making sure that all the processes are being followed. So that's the reason why we asked that question. And we do understand for the small startup companies, this may not be present in that company. Any joint ventures that they are working with, it is important, it is common in the built environment that they do partner and work with other companies. So if they are looking for joint venture cover or extension under our policy, we do need to see that if they are engaged with joint ventures, there are contracts in place, that the other party in the joint venture also carries their own PI and all those other important factors. We look at subcontractor duties as well. Are there contracts in place with the subcontractors? Because we always want to see that there is rights of recourse being maintained against subcontractors. In the event that they do make an error and they're working on behalf of the insured, we will defend the insured, but we do need to seek rights of recourse against the subcontractor. That is why it's important that there must be a contract between the insured and the subcontractor. Risk management procedures, again, what processes and procedures are being followed in the company, and are there any checks and balances when they are designing? Is there someone who's peer reviewing that design? And there's also quality management systems in place that they do follow when they are designing and advising their clients. So these are some of the questions that you would see on our proposal form. Another important one where we ask for the split of activities, as I've mentioned under the appendix or the addendum that we attach. That's very important that all those activities equal to 100, because then that makes us understand that the risk is split in percentage form. So I'll quickly share it for you so that you see what I'm talking about. I'll just stop sharing for now. Okay. So this is how the addendum of professional activities would generally look, and we would want the insured to indicate a percentage next to each of these activities, so that we can see where the exposure lies. And again, as you'll see at the bottom, I'm just going to quickly go up. You'll see that it must equal to 100. So they can't just put 100 on each of these. It must be an equal percentage so that it equals to a total of 100, if that makes sense. So this is what the addendum would generally look like. And we do see a lot of confusion from clients, because it might be that they are a multidisciplinary engineering firm. They do undertake some architecture work. They do other activities that are listed here, and they don't know exactly how to actually split that. So we do need them to give us a rough indication as to how much of the activity equal to what has been listed there. So I hope that is clear in terms of just what we are looking for in terms of that. Okay. Cool. And then the last part would be our claims history. Again, Kamini is going to touch on, our policy being a claims-made policy, and the reason why we would want to know if the insured has ever had any claims reported or not reported at the time of completion of the proposal form, as well as if they are aware of any matters that may arise into a claim, because our policy is a claims-made policy. If it's been reported to a previous insurer, it will fall with that previous insurer and not with us, and it will be then excluded by our policy. So we do really rely on insureds being honest when answering these questions, because it may then prejudice them at claim stage if they do not disclose any pertinent information relating to claims. So those are some of the questions that we would pose there on claims history. And yeah, I hope those are always clear. And yeah. Okay, so I will then hand over to Kamini, who will take us through our policy wording, intentions of our cover, as well as some of the claims that we have seen and handled. And she will just take us through those.
Morning, everybody. Hope everybody is well today. Thanks for joining us on this iTOO, and thanks Fiso for that very informative presentation. Before I get started, I just want to say a brief word on our PI claims team. It's a group of very dedicated and passionate individuals that we work with. We are legally trained and we have many years of experience, but I think the thing that makes us a bit different is that we wake up every day and we look at each and every claim in a different light and we think about them. And I think that really makes a big difference, because when you look at things with fresh eyes, you realize as a seasoned claim specialist that no one claim or no two claims are ever the same. In fact, even if it seems a bit inconsequential, is going to turn the direction of their claim. And yeah, we partner. I think you've seen in our last few iTOOsdays that we've had on PI and claims that we partner with the industry experts who really understand that the insured has a business and a business interest and a reputational interest. And that is a huge part of our claims philosophy, to keep that in mind at all times. So yes, guys, thanks for listening to my waffling on. Really excited. Yes.
Kamini, before you move on, sorry, I see Lucinda and Pamela have their hands up. I don't know if that's questions. We will get to questions at the end of the session.
Yes.
If there are questions, you're welcome to just post them in the chat.
Sure, guys.
Perfect.
And any questions that come up during the claim scenario, I know that a lot of questions come up during these claim scenarios. I'm happy to answer them at the end. Okay, so let's get into it. So this is the policy wording fee. So if you can just move, I think, to the next one.
Okay, perfect.
If the claims made insurance policy, that was the insurance clause. The important part of that is that the definition of claim, which means any written demand, legal, administrative proceeding. So a claim is deemed to have been made once you received something in writing to say that somebody is claiming damages from you, okay? And that's the definition of damages as well. Important as well, as Fiso was saying earlier, the claim must be reported to us and made during the policy or the period of insurance. And the period of insurance is the period as stated on the current schedule. Okay, we know that we have issues of non-disclosure, late notification. So I think there must be a big awareness that goes out to insureds regarding notification requirements in terms of the policy. Very important. Okay. The other thing, the wrongful act must take place after the retroactive date. So that pertains to what the insured is actually alleged to have done incorrectly. As long as that act took place after the retroactive date, there would be cover. If the act in question took place before the retroactive date, then obviously there would be a coverage issue. Okay, and the act of omission must have been caused in the performance of the professional services. Okay, so next one. Okay. So we'll pay damages resulting for a claim for breach of duty, or we'll pay defense costs. So if we have conducted an investigation and we see that the insured is liable, we don't prolong that process. We pay the indemnity in terms of the policy, or we can elect to defend the matter if our investigation shows that the insured is not liable. So the policy provides cover for either one of those scenarios. Okay, thanks, Fiso. All right, so let's get into the nitty-gritty. Okay, built environment claim scenario. So Fiso just gave a good presentation on the built environment. So we know that it relates to engineers, architects, land surveyors, quantity surveyors. And these are basically the type of claims that we see most prevalent in those areas. So incorrect specification. I've put down 2 examples here. So it can be something as, for instance, an architect. If an architect is part of a body, is designing a residential property, the body corporate specifies a certain color of paint that needs to be used in that body corporate rules, and then the architect specifies a different color of paint. It can be something as something like that. Then there can be a claim for damages. So what would the claim for damages be there? It would be the claim, obviously, for the new paint, for the labor related to the new paint. Then it can also get as technical as in a situation of a road surface, where an engineer is, for instance, there's a heavy duty vehicle traffic on the specific road, and the engineer has specify the wrong materials for that type of traffic condition, and result in the road having a lot of potholes. So there you can see the damages can be a lot more severe, because there would have to be obviously excavation of the road, if there's any structures on the road, that type of thing. So in any event, that's how incorrect specification would work. Okay, design errors, that's something that we see most prevalent, and that's where our most severe claims come from. How a design error is made: incorrect calculations, either made by a manual calculation error or by an input error into software. I think Richard Holt touched on this a few weeks ago regarding input errors into software. So what is the result of these calculation errors? It results in the structure that has been worked on then not being fit for purpose. So you get issues like settlement, deflection, cracking in surfaces, and these are all warning signs that the structure is ultimately going to fail. The biggest claims that we get, and you will see, and you heard about them all, are collapse claims. And there's loss of life, there's huge damage to property, etc. in claims like that, and we try. So that's the consequences of design errors and incorrect design in the built environment. Okay, a failure to consider specific project conditions. So an example of that would be, for instance, if the insured was designing a waste disposal plant, but the engineer fails to consider the organic nature of the materials passing through the plant. The plant may then not be fit for purpose. It may not be able to sufficiently dispel the waste, and that would be kind of a failure to consider a project specification. So it's important there to have contracts in place, as we've been saying, and to have a good record of the insured of all the instructions that he was given. Was he told of the project conditions, etc.? In certain cases, the insured just was told of the project conditions but didn't consider them in the design, and we see quite a few claims of that nature. Okay, so also, for instance, if you have engineer designing a hospital, and they're designing an air conditioning system, and there's certain requirements for surgical wards, then if the insured fails to require optimal surgical conditions, if he fails to consider them, then that's another example of failing to consider the project conditions. Okay. Another type of claim that we receive a lot of is fee recovery claims. That's an extension on most of the built environment policies. These claims, we get a lot of, they can sometimes become a bit heated because the insurer has skin in the game in these claims. So a fee recovery claim, for instance, if you look at the policy wording, a fee recovery claim is for the insured's recovery of their own fees. But there's two requirements that need to be met there. The first is that there must be a possibility that there can be a counterclaim in terms of the main provisions of the policy. And the second must be that it must be feasible for insurers to pursue the fee recovery on behalf of the insured. So the scenario there would be the insured is working on a project. The client says to them, listen, I'm not going to pay you R1 million worth of fees because you made an error on this, and other aspects of the project. That would be where the fee recovery section would be triggered, because the withholding of fees relates directly to an allegation of a professional error. Okay, so yeah, that would be the fee recovery. Thanks, Fiso. Okay, so that was the built environment claim scenarios. I've got another claim scenario here on tax practitioners. Let's go through it. The insured is a sole tax practitioner whose main source of revenue is income gained from submitting tax returns on behalf of the client. One of the biggest clients is a large pharmaceutical company. At the end of the 2020 tax year, the insured falls into a depression and she's unable to keep track of the clients. She fails to submit returns for the pharmaceutical company on time. In November 2020, she gets a notification from SARS querying the outstanding returns. She notices she made a mistake in submitting the returns. SARS assesses the return and determines that the insured client owes 500,000. Penalties and interest on the penalties are 200,000 of that total of 500,000. The insurer tries to appeal through SARS through 2021 with no luck. In February 2022, she notifies the claim to insurers, by which time the amount owing to SARS has increased due to penalties. So what is the professional error there? The professional error is failing to submit the tax return on time to SARS. And what would be the amount claimable here? So the amount claimable here would only be the amount in terms of penalties and interest. So a lot of the time we get questions as to that PI policies exclude claims for penalties. But PI policies exclude claim for penalties against the insured. Penalties against an insured's client as a result of the insured's negligence would be covered in terms of the PI policy because it's not a direct penalty against the insured. The rationale behind excluding penalties and punitive damages for in a policy is that it's against public policy to cover that, because the insured is supposed to feel kind of the pinch of getting penalized. So in this case, it doesn't apply because it was the insured's negligence that caused their client to incur penalties. Okay, so if you also see at the bottom there, she knew of the circumstance here in 2021, and she only notified in 2022. So that's a good example of where an insured is aware of a circumstance, should notify us. In any scenario where the insured is aware that some type of claim can come against them, regardless of whether or not they feel that that claim is going to succeed against them, they should be notifying us. Okay, thanks, Fiso. Okay, next one, thank you. All right. Attorneys' PI claims, I'm not going to go too in depth into this. Just to say that all of our policies act as a top-up policy to the LPIIF, which is the statutory insurer for attorneys in South Africa. The LPIIF, you get an attorney automatically gets covered through them if they have a fidelity fund certificate. So there's automatic cover, but the limits, I think, at the most are 3 million, which is why we offer cover in addition to that, the 3 million limit. And there are certain exclusions in the LPIIF cover, one of which is misappropriation, that the top-up policy will sometimes offer cover for. If you get a claim for an attorney, the claim needs to be notified concurrently to the LPIIF and to the top-up insurer. If you go onto the LPIIF's website, you'll get the claim form, the email address of who you need to submit the claim to, and also their policy wording. So you can have a look at what they cover and what they don't cover. I'm just going to go quickly through this misappropriation example. Fiso will be able to give you more information on the extent of misappropriation cover that we give, but as far as I understand, it is fairly limited. Okay, so the insured is a firm of attorneys and conveyances. The insured attended to a multitude of property registrations, and they employ 5 conveyancers and conveyancing secretaries. As a part of the registration of these properties, the insured has to pay over estimated rates clearance to the municipality. On some of these occasions, the rate clearance amounts are overestimated and refunded to the municipality to the insured. The insured is then obliged to refund the monies on the properties. The insured auditors advise that they have flagged a number of suspicious transactions, namely payments into one particular account. The individual payments are small amounts, but over a period of time, the accounts accrue to an amount of 1 million. Upon investigation, it's discovered that one of the secretaries had been transferring these refunds from the municipality directly into her own account instead of refunding them to the clients. Okay, so what questions come up here? Entrusted monies versus the insured's own money. So misappropriation will only cover you for entrusted monies. The Legal Practitioners Act gives a definition of what entrusted monies are. So it's third-party monies that is covered in terms of the misappropriation of trust fund policy, not the insured's own monies. Okay, there is a requirement of a demand. So if the attorney sees a shortfall in their account, they need to advise their clients of the shortfall, and the client must then make the requisite demand in order to trigger the policy. Okay, the LPIIF versus the LPF. So I spoke earlier about the LPIIF, which covers all negligence claims of attorneys. There's another body called the LPF. So as I said, the LPIIF doesn't cover misappropriation of trust funds. The LPF does cover it, but it's a fund of last resort. So only if the attorney's insurance policy and all of their assets, liquidated and unliquidated, cannot meet the misappropriation claim, then will the LPF come into play. So it's really a last-ditch effort to get an indemnity out of them. Okay, what steps should an insured take when they discover misappropriation at their offices? They must take immediate disciplinary action against the employee. They must report the matter to the police. They must freeze any funds that the employee may have, which the insurers could possibly have a recovery on. So as I said, that these type of misappropriation claims are very easily avoided if the insured puts into place proper protocols. For example, internal order protocols, making sure that one employee does not control a transaction from cradle to grave. And yeah, these type of internal controls should be in place for the insured. And we see that when a firm of attorneys does have these in place, we don't receive many claims from them on misappropriation.
What about leave policies? Because you do find some employees that never take leave, and the day they take leave is when you actually discover that there's been some sort of fraud going on there.
Yeah, that is true. That is true. You find that. So I think a lot of attorneys firms have now put into place a process where they're conveyancing secretaries in particular, because these type of things are most rife at conveyancing firms. They have put into place something where the conveyancing secretaries have to take leave on an annual basis and for an extended period of time, so they can pick up these type of errors.
Perfect.
Okay, so I don't know if there's any questions that we can answer.
Not yet, Cons. I don't
Okay.
know if you want to finish and then we'll hop back.
Okay. So I think that's it from me, Fiso. I don't know if you wanted to ask anything else on maybe the built environment claims examples. So I see
there were two participants with their hands raised.
Yeah.
So,
I'm not sure.
Yeah, okay, so maybe Cons, Lwando's asked a question on the pothole example.
Yeah.
Would the policy respond to any damage to vehicles or injury to persons who have used that road? Will the bodily injury and property damage exclusion hold up?
Okay, so that's a good question, Lwando. The bodily injury and property damage exclusion on the PI policy is not always absolute, as far as I understand, Fiso.
Yes.
Sometimes, or in most cases on the PI policy, it will say that there is a bodily injury or property damage exclusion unless the bodily injury or property damage occurred as a result of the insured's negligence in the performance of their professional duties. So if that is the case, we will still cover the bodily injury and property damage exclusion. So in the pothole example, we have a case where people have alleged that an engineer's negligence has caused a pothole, and they have resulted in serious injuries which were covered under the PI policy. But as I said previously, guys, let me put my disclaimer here. All claims turn on any one particular fact, and we can't really say that everything will always be handled in a certain way. Everything will always depend on the specific facts of that matter, as is written here in my disclaimer on the screen.
Cool, thanks, Cons. And then Fiso, there are two questions from you. One is from Antoinette Earvils. What figures do you use to base the premium on?
Sorry, I'm just trying to turn on my video. So we do use past fees or past professional fees earned. That's what we based the premiums on.
And then AB is asking, would it be beneficial from a price point of view for the client to belong to a professional body?
So yes, it will be, because if the client is, belongs to a body, then it gives us comfort to know that they are attending any CPD courses, being offered by that regulatory body. They're keeping abreast with what's happening in the industry, any changes to the regulation they are aware of. So it gives us that comfort of knowing that the insured is doing what they need to do on their side to, to keep informed with their industry. Yeah.
Cool. So there aren't any more questions from our side. A lot of brokers asking for the presentation to be shared. It will be uploaded onto our YouTube channel, as all of our iTOOsdays are. Fiso, I don't know if you are happy to share the presentation.
Yes, I'm happy to share it. I do have a question for Kamini on some of the project management claims that we've seen. If you could just touch on some of the ones that you've seen, because project management is quite broad, and not all, it doesn't just fall under one category. Have we seen any project management claims, and what have we seen from that?
So project management claims is trending at the moment, because I think in maybe the last 5 or 6 years, the role of the project manager has become more prominent in the built environment. Mm-hmm. Prior to that, I think it was kind of a casual, I would say, not a formalized role, but now it has become more formalized, and engineers and architects, or whoever the project manager is, are starting to charge fees for it. Mm-hmm. We see most of the claims that project managers are involved in relate to kind of a dispute between the employer and another contractor on the project. And the project manager is kind of always drawn into this dispute as a result of the fact that they were the person that was, employed to handle the project as a whole. So we don't see many, I mean, there are some claims that are paid as a result of the project manager making an error, but most of the time it's a dispute between a contractor, the employer, the project manager is being drawn in. As well, in these tough economic times, we see a lot of contractors going out of business. It's a sad reality of the construction industry in South Africa. So when these contractors go out of business, then the next port of call for the employer to recover their funds is obviously from the project manager. So yeah, so that's the type of claims that we see for project managers, and they go into the millions. So yeah.
We do have another question from Lwando. Should professionals providing services on a major project rely on the cover afforded under a single project PI policy, or should they also have their own company-specific cover?
Fiso, do you want to handle that, or should I?
So if a project requires a single project policy, then generally that's what the engineering firm would take, because that would cover all the other consultants. That's what a single project does. However, an annual PI policy would only look at our insured's exposure in that project and not covering all the other consultants. So that's the difference. I don't know, Kams, do you want to expand on that a little bit?
Yeah, the project specific policy, I think, will always come into play first. And the annual policy will come into play after the fact. So I think on huge projects, yes, it is a good idea to take out a project specific policy. And I think employers on big products just take it out for their own peace of mind, because as much as they can have their sub-consultants having their own cover, sometimes it's not always sufficient, the annual policies. And sometimes also, it may not respond to certain things. So just for a sense of comfort, they do take out project specific policies. But to answer the question, it's always advisable, even if you have a project specific policy, you should have an annual policy, because you'll also find that in some contracts that the insured enters into, they will say that the project specific deductible will be paid for the consultant who was found, will be paid by the consultant or consultants that are found to be liable for the error. So some of the times the annual policy comes in to cover the deductible of the project specific policy, and the deductible on the project specific policies are quite sizable. So that's why it is very important to have an annual policy in addition to the project specific policy.
Lwando seems very happy with our answers. So well done, Fiso, well done, Kams. We have a question from Bongani. Does the attorney's PI or misappropriation offer some cover for misappropriation of funds due to fraudulent transfer activities? I know some insurers offer some cover to an extent, as there is a thin line between misappropriation and cyber hack to the email address sending the instructions.
So that's a great question. Thank you. So that would generally be extended under the impersonation fraud extension, where if the attorney firm does buy misappropriation from us, we will then extend it to cover that impersonation fraud, because it's not necessarily caused by, so the error or the theft is not caused by the cyber hack, but by the error from the conveyancing person who then transferred the funds, acting, from an instruction that looked like it came from the client, whereas it actually didn't. So we do offer impersonation fraud cover under the attorney's policy.
Just to add to Fiso's comments there, our impersonation fraud cover does have a deductible structure that should be noted before submitting a claim. And also there needs to be a verification procedure in place. And the verification procedure is very strict, and the insured needs to comply to the word with that verification procedure in order to receive cover for impersonation fraud type claims. And just to have a quick risk management note on that, it's very easy to avoid impersonation type fraud claims. All it takes really is a phone call to your client to say, or to whoever. I mean, I do it myself, even if I'm paying my mom. I'm like, is this your banking details? So it's very easy to avoid these type of impersonation fraud type hacks. So the insured must put into place a verification procedure and make sure before any payments are done, they do some type of verification. So just
or to maybe pay 100 rands first or 50 rands and
yes,
see.
Pay 150 rand and see if they got.
Before you pay 100,000, rather pay 50 rands first and confirm with the client if they received it, and then you can pay the rest of the money. So
yeah. Listen, the scam is rife, and it's still going on now, years after the fact, and it needs to be really stopped in its tracks now. And I think with the proper risk management, it can be definitely.
100%.
Cool. We have Musa asking, are subcontractors always automatically covered under the insured's policy? If yes, are there instances where we do not cover them?
So we don't automatically cover it, only where the client has requested it, or where they've indicated that they do subcontract their duties to other companies. It is also a strict extension of cover, because we do require that the client make sure that there's contracts in place, make sure that there's, as I said, rights of recourse retained, and that these subcontractors do hold their own PI cover. Because we do find that sometimes the errors, or most of the errors, are being made by subcontractors and not our insured. And then we end up actually defending, and it's not our insured's fault. And so we do require that there is adequate cover in place that they hold as subcontractors. We don't automatically just offer the cover. It is one of the benefits of our policies. But where we see that it's more than 50% of their duties that they subcontract, we will start to ask, a lot of questions, because we are now taking on a risk that we've not seen. And instead of writing the insured's risk, we're also taking on some of the subcontracted duties as a risk as well. Kams, do you want to add there?
Yeah, I think the most important point that you made there, Fiso, is the right of recovery. Because the policy is not there to cover the insured for something that they were not negligent for, or they did not do, but they subcontracted it. But we understand the nature of business, that if the insured has to appoint a subcontractor, their client is ultimately going to hold them liable through the contractual relationship. But at the same time, we need to have that right of recourse against the subcontractor to make sure that we can recover any monies that were paid out under that extension. And I think the same applies to JV, joint ventures. So in the joint venture law in South Africa makes joint venture partners severally liable for any damages that are awarded. So also when entering JVs, the insured must not waiver the right of recovery from the JV partner. Their contract must be airtight in that regard, because otherwise there's going to be a policy issue come claim stage.
Cool. We've got another question. What will happen if the subcontractor provided proof of insurance, but at claim stage it is found to be cancelled or lapsed? Will the insured's policy respond?
Kams, that's yours. I'm sure you've seen this a thousand times.
Yeah, so I think our policy makes it very clear that the insured must take all reasonable steps to make sure that the subcontractor has active insurance cover in place. So if it is found at claim stage that there was no active insurance cover on the part of the subcontractor, then the insured has not complied with the policy conditions, and we'll have to look at it in that light. So I think it's very important. The insured must, as Fiso had in the last iTOOsday, these contracts are of utmost importance to make sure that the insured has right of recourse in every single aspect. Some things that we think are so inconsequential, like a subcontractor's insurance policy that needs to be put into place. All of those things must be listed in the contract to make sure that the insured is protected. It's for the insured's own protection. It's not yes, it's not for us. And it's also, it's not something that their client should be holding over their head as a threat, which we do see quite often now.
So another one from Lawando's put something in his porridge this morning. On subcontractors, what should insureds consider when selecting the subcontractor? Due diligence such as past experience, do they have their own PI? What are the elements that can assist our insured in protecting their PI policy?
I think for me, the important part along what you've mentioned is, are they suitably qualified? Because you don't want to be subcontracting to someone who actually has no clue as to what they're doing. And again, that increases your risk of errors in that project as an insured. So I would say for me, it's critical that there's a contract in place, firstly, governing that relationship between the insured and the subcontractors. They are suitably qualified, and all rights of recourse are maintained via the contract that is in place. So for me, that's the important part in terms of the due diligence.
So we do have about 9 minutes left. If any brokers want to squeeze in some last minute questions.
I see there's 2 in the Q&A.
Oh,
sorry guys. Okay, Piers is asking, how are claims dealt with where insureds contractually waived rights that they would have had in the absence of the contract? You mentioned earlier subcontractors specifically in the built environment, and for some reason it's not letting me see the rest.
Counts, do you want to go for
maybe we deal with the first part.
Sure.
Yeah.
Yeah.
So where we see that the subcontractor is the liable party, and that there would have been a right of recourse against the subcontractor, unfortunately we would have to enforce the policy conditions there. If the policy condition says please do not waive your rights of recourse, and you do, and we are unable to recover from the subcontractor, then the claim will have to be submitted through our rejection protocols.
Graham Keddy is asking, surprise subcontractors are not automatically covered or included, as 90% of the main contractors appoint subcontractors to do specialized work. So you're saying the insured has to request this to add subcontractors?
So what I was saying is that where we see that it's more than 50% of work being subcontracted, we do then ask questions as to, are these suitably qualified? Is there contracts? Are there rights of recourse in place? Because then half of the insured's business is subcontracted to other companies that we've had no option, we've not been able to see or underwrite those companies. So the risk is high, and it does change the insured's risk profile. So yes, on most of our quotes, we do extend to subcontractors, but you'll see that it's always a sub-limit, because we don't want to give it to the maximum limit of indemnity, knowing that they are subcontracting 90% of their work. We would look at those risks, but we will ask a lot of questions relating to the subcontracted duties, because that then changes the insured's risk profile. So not automatically included means that if we see that it's higher than what it would be normally, we would be asking questions prior to us offering that cover or offering that extension. I hope
Craig
that
is asking, if a subcontractor is included and a claim arises, will you have recourse against the subcontractor?
Yes, we will have a right of recourse against the subcontractor if the subcontractor is liable.
Okay. And then we have a question from Stuart. An insured subcontracts and obtains proof of PI cover held by the subcontractor. In time, the sub stops paying the monthly premium, then a claim incident occurs. Must the insured check every month that the premium has been paid?
The insured mustn't check. I don't think they need to check every month, but they need to be, suitably, reasonably aware of the fact that the subcontractor does have. So that's what we were saying earlier about contractual conditions. The insured must have some type of remedy in the event that the subcontractor does not keep up the insurance payments.
Bongani is asking, from a price perspective, when considering rights of recourse against subs, would this make any premium or cover implications, if any, when underwriting a risk, especially after experiencing that sometimes as insurers we fail to recover?
So yes, it definitely does. Again, it goes back to the fact that how much of the work is being subcontracted. Generally, we will then price for that. And we would also put in a high deductible, if most of the work is being subcontracted, because again, as I said, it changes the risk profile. So we would price for it. So there would be some underwriting considerations there, as well as, again, asking the pertinent questions relating to it, as well as what contracts are in place. We'll go as far as asking for a copy of that contract in place for our record purposes, because we need to know at all times that there is a contract in place governing that relationship.
Cool. That's looking like it's it. Do you want to start closing up, I think, guys?
Yeah, so I think if there's nothing else from comms and no other questions, we will then be closing the session. And I hope you did enjoy. If there's still any other questions, please feel free to email it to us or to Christiana, and we will then answer those individually. But thank you so much for your time, and thank you for joining us today.
Thanks, everyone.
Oh, there's a raised hand. There's a raised hand before we go.
Okay.
Yes.
It's been put down, I think.
Okay.
Yeah,
But thank
it's been put
you.
down.
Thank you, everyone.
Thank you. Bye.
Who was recording? I think it was Sneh. Sneh, you can stop recording now, I think.